Mortgage rates are falling as we speak, and I'm starting to see some buzz around the community about refinancing to a lower rate. And there are a lot of clients that bought homes over the last 2 to 3 years that they are at a time now where we can start planning the refinance. But I wanted to get this video out as I wanted to share what's the best strategy to actually get the best refinance option for yourself. And I see a lot of times where people refinance because of clickbait marketing and other mainstream media to a lower interest rate, but there's a ton of cost baked into it and they had no clue what they actually signed up for. And so I wanted to get this video out to help people prepare. If your interest rate is somewhere anywhere in the 6s to 7s, now's the time to start planning for a refinance. Or again, if your rate's even higher than that, we definitely need to talk. But let's just start here. Average people that have bought homes in the last 2 to 3 years have been closing in that 6 to 7 range. And I'm going to share a real client's story here that we're working with right now in process of how we're helping them lower their monthly payment and their interest rate in a responsible and smart way. And so let's dive right in. This is what I call the no net cost refinance strategy. There's always closing costs with refinances. There's no free lunch, but there are some creative ways to do this to where you're not adding a ton of cost or increasing your loan amount when you go to refinance. And so if we look on the screen here, what I've got is this client's current loan is at $593,000. He's at a 7.49% rate, total monthly payment with the mortgage, property taxes, and insurance at $59.41 a month, okay? Mortgage rates today are in the mid 6s for a 30-year mortgage, which is option 2 here. If we take this client from the current loan to option 2, we're lowering the rate by 1%. And some people think that you need to lower your rate by more than 1%. Some people think less. I'm going to shed some light on this for today. So 7.49 to a 6.49 would save him $388 per month, right? That's great, right? That's immediate savings per month, interest savings, but there's $8,600 of closing costs that is added to the loan, right? If you look at the new loan, we're at $602,000 versus $593,000. So we are increasing that loan amount. But here's the key, right? And let's break this down of how this works, right? Again, client's current monthly payment is $59.41. Current balance is $593K, okay? If we were to close this client on the new refinance in the month of October, their first mortgage payment wouldn't actually be until December 1st. With the way mortgages work, if you close in the month of October, this client's first payment wouldn't be until December 1st. And so if we close in early October, this client's actually going to skip 2 months of their current payment, right? If they're paying right now almost $6,000 a month, so $59.41, times that by 2, so they don't make October payment, they don't make November payment, they're actually saving $11,882 in monthly payment savings between now and December. Okay, now we fast forward to December, right? Again, they added the closing cost, but in December, if that client takes that $11,882, and then applies it right back to the principal, now their loan balance would go down to $590 from $602. And so we're actually moving forward in a lower loan amount than where the client started at $593,000. This is a very creative strategy that not a lot of lenders talk about, and I wanted to shed some light on this because there is a way to actually do a no net cost refinance strategy if it's timed and planned properly. And now this client's saving almost $400 a month, and their loan balance actually went down from where they started. And again, let's say that rates drop another 1% a year later from now. Well, we can just do this again. If we can get him to a 5.5% rate in a year, 2 years, 3 years down the road, we can take advantage of that. The key is, how do we start saving interest and saving money on a monthly basis now and take advantage of the market we're in, because we can't control where the future is going to go. And if there's a way that you can lower your payment and your interest, take advantage of that. I see a lot of people waiting to get to like 2% lower for a refinance. And every month that passes, if this client doesn't do this, they're actually wasting $388 a month because the going market rates are lower than where they're at. And so even though they're only dropping 1%, they're dropped enough to start saving now and take advantage of that. And then that's where having a professional lending partnership to help manage your mortgage after closing is as a benefit. I have a lot of people that I know that close with large banks, not to say any names here, but they close with large financial institutions. and they don't really care about the client's long-term longevity with that mortgage and with their financial being. And so our team, we prepare and we help clients with mortgage management to save as much money over time with their loan. Okay. And so that's the no net cost refinance strategy. It can help you lower your monthly payment right out of the gate. It can help you start saving some money, especially as we head into holiday season. Now, the other strategy I wanted to share, if we keep those two scenarios up, the current scenario, the 30-year options we were talking about, but if we do the debt-free strategy, and so I have a lot of clients that come to me and say, hey, how do I pay off my mortgage faster? How do I shave off as much interest as possible? And so this is a strategy that some of my other clients are doing, which is maybe you close on a 30-year mortgage, but today we go to a 20-year mortgage or a 15-year mortgage. And so what's on the screen here is showing a 20-year mortgage with a 1-point buy down. And what happens with this client is they're going from a 7.49 rate on their current mortgage to a 5.875 rate, and their monthly payment is going up by $121 a month. So not a major increase, right? And so you're like, well, why would I do this? Well, the bigger picture on this is when we take a little shift from a 30-year to a 20-year and we lower the rate, look how much interest and savings they would have over a life of 30 years. Their mortgage would be paid off in 20 years now, but look how much interest savings happens over the life of the loan. We go from right now, no savings, to literally saving them $416,000 over the life of the mortgage if they were to stay in that loan or stay in that house. The key is we don't know if the client's going to do that, right? But how do we prepare every single day, every single month, and every single year to make sure the mortgage has as much savings as possible to where the market is, and adjust strategy as we go? And so I hope this video was helpful. If you're a homeowner, if you know somebody that bought a home in the last couple of years or just needs help with managing their mortgage, reach out to us. There's no cost to this. We don't need to pull credit. We don't need to do anything crazy yet. I just, when we have discovery calls with our clients, really just need to copy your mortgage statement, and then we can take a look at where you're at right now and put you onto what we call our client refinance rate strike alert tracker. Okay, it's a big mouthful, right? But we have all of our clients set up on a refinance rate strike tracker. What this does is, instead of you having to wonder, when should I refinance, our team, we manage all of our clients' mortgages and rates, and we reach out to you to figure out, let's start planning and let's time this to your benefit. So feel free to scan the QR codes or click the links below to set up a discovery call. Or if you want to just go ahead and get started with the pre-approval process for a home purchase or a refinance, you can scan that and get started. Take care.